Problem was also, dang, crypto is really, really hard to use. So that was also a problem that we need to solve within the Parallax ecosystem. And we're proud to have built a really strong user experience marrying crypto and stablecoin self-custody with something that a non-crypto savvy user finds very intuitive.
That's Mika Reyes, founder of Parallax, a cross-border payments company for freelancers and contractors, all powered by stablecoins. Mika's personal experience with remittances inspired her mission at Parallax, and she brings a really thoughtful perspective on how she's running and growing her business. In this episode, we dive into how Parallax is reshaping payments for the gig economy, the importance of user experience in building crypto products, specifically for wallets, and the role of stablecoins in creating faster, cheaper payments all around the world. Thanks for listening.
Season 1 of Stableminded is brought to you by Layer 1, powered by BVNK. BVNK has been at the forefront of stablecoin payments for years, and Layer 1 is their latest innovation. Designed for businesses ready to harness the power of stablecoins, Layer 1 is self-custodial, global, and takes the hassle out of managing payments across multiple chains. It's the same technology BVNK uses to run their own operations that they've been developing in-house for years. Next season, we sit down with Johannes Kask, Managing Director of Layer 1, to talk more about it. So stay tuned until then.
Mika, thank you so much for joining us today. How are you?
Of course. Thanks for having me here. I am doing great.
We owe a big, right off the bat, we owe a big thank you to Ryan from Dakota. We recently met with him on the podcast, and toward the end of the conversation, I asked him, who's someone that is on your radar, that you're following closely, that you look up to, who's doing stuff with stablecoins, and he said pretty quickly, Mika from Parallax. And so I owe it to him for pointing me your direction. I've been familiar with Parallax, but I'm really excited to dive deeper into it today. So shout out to Ryan. Go listen to that episode.
Let's go, Ryan.
Okay, cool. So why don't we start with your high-level intro, your name, and then a brief overview of what you're working on with Parallax before we get too in the weeds with your background.
So Mika, founder of Parallax. It really the manifestation of Parallax. We're focused on using stablecoins as the global money mover for folks who are freelancers, remote workers, contractors. And really started here because of my experience as a freelancer in the space, as well as someone who grew up in the Philippines and is now based in the US, trying to send money back home, back and forth. So Parallax is really tackling some of those money movement problems. We're excited to have been one of the earlier ones that had this focus and thesis on stablecoins to move money, and excited that more people are getting into the space now too.
Yeah, it's for that specific use case, like freelancer, payouts, cross-border remittances using stablecoins, definitely a very, very top of mind conversation. Hence why we decided to start this podcast. Hopefully it can be a way for people to start getting a look into who are the players and what is being built here, or what has been built in the coming years or the recent years here. So I was doing a little bit of research and listening to some other interviews that you have been on, and it was very, very clear to me that you are an incredibly mission-driven person, mission-driven founder. Would love to just start the conversation around that, just that part of who you are, and especially the resonance that you seem to have with this problem uniquely around, sending money around the world, and what that has felt like and currently still feels like. Just for those who might be getting to know you and your background for the first time, what is your personal experience with that issue, being from where you're from?
Yeah. So it all starts with where I was born and raised, right? So I was born and raised in the Philippines and really came to the US by way of college and have stayed here since. And I think through my back and forths between the Philippines and the US, that whole mission-driven desire to use tech as a vehicle for good and good change in the world manifested. And also in between my back and forths, that's also where I was trying to send money, found it very cumbersome, and some of the problems we're solving at Parallax. But I came to US, and my background is all in product management. So I was a part of different startups in the Bay Area and globally as well, through a couple different fellowships that I was a part of. So I'm very thankful for the Kleiner Perkins Fellowship and the Kleiner Perkins community, who I'm friends with still to this day. The South Park Commons community was part of On Deck as well. Just a big community and fellowship power user. And I was also part of LinkedIn. So I was part of the product org at LinkedIn. If you've seen those purple I'm hiring rings on people's profiles, led the product for that, but really just growth of the jobs product. I think it's also in LinkedIn where one of our missions, right, is to increase the economic opportunity. The world really resonated with that and decided that I wanted to take the learnings I had at LinkedIn and all these startups to start my own. So Parallax, the first manifestations of my Parallax or the first thing it really was solving problems for certain businesses that were moving money using crypto and fiat. And quickly realized that we were seeing this pull and demand for using crypto as a payments vehicle. We're really seeing it from the contractors or the freelancers and receivers. So really follow that pull. And that was also intuitive for me because I juxtaposed my ability to send money on Solana with a Phantom wallet to my experience sending money back and forth to the Philippines and the US, and saw that was a vast difference in speeds and the fees. So we thought there was an opportunity here. We were feeling the pull from these contractors and these freelancers. I understood the problem really well. Part of the problem was also, dang, crypto is really, really hard to use. So that was also a problem that we need to solve within the Parallax ecosystem. And we're proud to have built a really strong user experience marrying crypto and stablecoin self-custody with something that a non-crypto savvy user finds very intuitive.
It's amazing. Okay, so a lot of good stuff there. So this original experience with sending money back and forth, it sounded like started when you were in college, or you were in the US for that period of your life, and you were remitting funds back to family members. Is that what was the use case of that, and how did you at that time accomplish sending funds back and forth?
Yeah. That was one of the use cases, yes. Sending money to family members, sometimes to friends if I was traveling with them. It was cumbersome, and I think what we ended up doing was effectively, if I was in the Philippines, my dad would pay for some of my expenses, or the other way around, just to kind of like keep a balance, and then deduct that from a spreadsheet. So we didn't actually move some of the money. It was just like, hey, I paid for this, I owe you, you owe me. We also eventually started opening up PayPal accounts. So my siblings are in Canada, in Vancouver, and every so often, if we really need the money, then we'll use PayPal to do the transfers. But we try not to because PayPal is just rife with a lot of fees, and so we do it very infrequently or only if we really need to.
For those who may have not experienced using PayPal or sending money with these more traditional cross-border payment systems, I think they're, at least in some ways, they've solved for speed because they have this sort of closed loop system in some ways. What are at least the fees right now for those types of platforms historically, or what should someone expect if they're not doing this with stablecoins?
Yeah. If PayPal specifically, they can hide their fees and get up to 6%, or even higher, right? I think the best in class here is Wise for the most part. For some reason or another, I can't open a Wise account anymore, so I haven't actually been using Wise.
Really?
But they're probably the most competitive in terms of their exchange rates and transparency for the most part. The way that I like to think about cross-border payments in general is in what I call cross-border payments 1.0, 2.0, or 3.0, right? So 1.0 is really the banks. They're using Swift transfers to move money. It's great. It was great at the time because there were no great ways to be moving money, but they were still very expensive, right? $20 to $30 no matter what the transaction is, and very still could take weeks even to move money. And so cross-border payments 2.0, these PayPal's, Wise's, Payoneers of the world came, and the way that Wise works, for example, is they do something called netting, right? They're not actually moving money between two countries. They have bank accounts in country A and another bank account in country B, and they're just changing up their ledgers whenever money moves from country A to country B. They net that from country B to country A, so that at the end of the day, it's $0, right? Kind of similar to me and my dad, where I was using money in the US, and then every so often we just net the balances out. Right? So that's effectively what Wise does. With multiple transactions happening at any one point in time. The problem with the 2.0s is that it takes a lot of effort to make that happen, right? It's a lot of compliance. You need to create bank accounts in each country, in each corridor. You're holding people's money, and so that has regulatory obligations for custodying users' funds. There's restrictions that are imposed to be expanding, right? And took them several years to be able to build a product as robust as that. Now, I think stablecoin players such as Parallax can win is because we are now effectively using stablecoins and, in my opinion, self-custody, right? And what self-custody really means is we're using these wallets, quote unquote, balances or bank accounts, but wallets that are on the blockchain. Instead of us as a company controlling these users' funds or having the liberty to move money around, it's really the users and only the users who can move money around. And the nice thing about that is that decreases the regulatory burden for any one company to be able to grow globally. And because we're using stablecoins are actually moving money from country A to country B extremely fast and extremely cheap depending on the blockchains you're in. And so I think there's a whole wave of stablecoin payments companies that can win out against these incumbents. And that's why I'm very, very excited about the space.
Okay, so then with that being said, it sounds like the third bucket, right? So you have the banks, the PayPal, Wise, Payoneers, and then this third bucket, which is, in your view, the self-custody, on-chain balances, stable coins. Is that how you would describe the third?
Exactly. It's the cross-border payments 3.0. And the nice thing for the user is that instead of seeing the 6% fees on PayPal, we're able to also pass those savings back to our users because we have less of an operational burden, less of a regulatory burden, and that becomes cheaper and much faster for users, which is ultimately what they care about.
Absolutely. Amazing. So you resonate with this problem personally. You've experienced the family ledger on both sides with your dad, which is awesome. You've had to find these workarounds yourself throughout your life, and you now have this current like 1, 2, 3 stage moment where we're now entering this third wave of like self-custody, stable coins, transmitting value using blockchains, which are naturally decentralized and not owned or managed by a single government, which unlocks a lot of what we're talking about. I want to dive into a little bit on what you've mentioned around like the wallets and the regulations and how that unlocks things. But I'm going to put a pin in that because I do want to continue to dive into Parallax specifically and help people really wrap their heads around who you're serving and for what purpose. You mentioned a lot about the primary customer profiles that you today are really serving well. And it sounds like you have some pretty strong product market fit with the freelancers and contractors, essentially people around the world who are doing work, but they might be doing that work for companies in other countries. Would love to dive into, like, in your opinion, why those customer profiles really resonate with Parallax. And if you were to invite that person who's a freelancer in Latin America or Argentina or around the world who may not be using stablecoins, like what is the key benefit to that person to use something like Parallax?
Yeah. So we started with this use case for a couple of reasons. One is I knew it, and I knew other people that were also other freelancers and contractors. So it was great to kind of get that feedback and be a user myself. And two is compared to the traditional remittances, which is, I guess, also my use case, sending money to family and friends back home. We thought that it was more underserved at that moment, and people were clamoring for a better solution. But also the transactions are much higher, right? An average transaction for a Remitly platform, for example, is $100 per month. Ours can get to the thousands, and that was great, higher volumes, but also more recurring, right? Because these are payroll, salary use cases. You get it bi-weekly or monthly. So that was attractive enough for us to say, hey, okay, let's start here. And the product is resonating. The nice thing is we're also seeing the product resonate for the senders, right? And the businesses that are also now coming to the Parallax platform saying, hey, I want to create a business account because I want to send money transfers faster. I'm having trouble with PayPal holding my funds or Wise, where ultimately there are still some transactions that are not instant, right? And I've heard great things about Parallax by freelancers, and I want to be a part of it. Great signal for us. So we've also started to talk to and entertain these business accounts. And really where we start is starting with a specific niche and use case and the goal is to be expanding to other use cases, right? And really the goal is to create this Parallax payments network where we're starting with the, I'd say, the professional use case, but we also want to be a platform for remittances as well, and all these other types of payments over time, and starting to entertain that as we see businesses also coming on the platform.
Yeah. So you saw as a founder and someone building the commercial side of making this work, just the nature of getting paid in a regular recurring fashion, and compared to buying a coffee, this isn't like a small payment. These are potential salaries or potential payments that are large. So it sounds like that's built a pretty significant, at least financial structure or foundation for you guys to build off on.
Mm-hmm.
I'm starting with the individuals, but now from what you're saying, it sounds like businesses and institutions and companies are starting to use this. What is the benefit, at least from your view, on maybe the uniqueness or the pain points that you might be solving compared to a user, but now on the business? I would love to just dive into that a little bit more, because at least in our first chat, it sounds like this is more of a new emerging part of Parallax, like opening up the door to more businesses. Would love to, maybe the question would be, what's unique in your opinion about serving a business, and maybe what they care about or why they're coming to the platform versus the more historic individual customer persona?
Yeah, I think ultimately it still comes down to two things, but it's a speed and fees, right? But I see that businesses lean into it even more because they've been having trouble with more traditional payment routes, where effectively the way that the netting works and is supposed to work is that if there are multiple transactions that are coming in and multiple relatively small transactions that are coming in, then those balance out, right? But at the end of the day, if Wise has a deficit of money coming in from country A to country B of $1 million, they still have to wait for Swift transfers. They still have to actually make a Swift transfer to move the money at the end of the day. And these people who have $1 million and they're waiting for it on the other side, they are still affected, right? And so it's not as fast as instant, because money is not actually being moved until that end of the day Swift transfer happens. And so there structurally is more of a problem for higher volumes, because Wise relies on multiple smaller transactions netting out. And how that manifests for businesses. So you have a business that's onboarding to the platform or onboarded to the platform, and they mentioned that it's not as reliably fast, right, as they want it to be for their multiple payments that they're sending out to their contractors, to other vendors. And I think that's where the blockchain and stablecoins can shine, because actually money is being moved and very instantly, and no cap on the transactions between certain wallets and balances, right? And so reliably fast is what we're leaning on. Reliably fast for higher volumes is what we're also seeing and is felt by businesses in particular.
So when you say higher volumes, that means, like, if I'm an investment fund or a company that's typically dealing with larger sizes of payments and maybe in less quantity but bigger size, because there's not that frequency that would typically help the ledger movements of a Wise or a traditional company that you mentioned. You're saying that those businesses that might have bigger payments more infrequently are really being affected by these settlement times. Is that essentially capturing that correctly?
Yeah, or even just being able to move. It's both that's grounded in some use cases, right? Like import and export use cases where they have to send large amounts to their suppliers in another country at any one point in time. It's still a lot of money to be sending, right? But it's also affecting a business that has 500 people that they need to send money to at large volumes, and they want to be able to send that instantly. There's one a business that onboarded that is before Parallax. They had to schedule different payment schedules depending on the platform. So they were using Wise, they were using PayPal, they were using Jeeves, if you're familiar. And they were like, okay, since Jeeves is a little bit slower, let's schedule the payment on Monday. And since Wise is a little bit faster, let's schedule it on Thursday. And the goal is to have everything come together on Friday. To people's accounts, right? And they're sending to like 300 or 400 folks. And it's still a large amount that needs to be sent at any one point in time, but through these different platforms because it was unreliably fast or slow, right? Whereas in Parallax, they have one balance and they can send it instantly because of the Solana blockchain. They don't have to schedule in that way.
I wanted to ask you then about the idea of self-custody and the comments you made around that. And from our brief conversation last week, you mentioned that you decided to architect and build a lot of this wallet infrastructure within Parallax in-house. Something that I've been and continue to be really fascinated with is the wallet as a service part of this conversation. And a lot of the companies that are innovating in the space and taking, in my view, a lot of really unique approaches to providing that type of offering as a service. When you were, and maybe this was early in the journey of having to figure this out, and maybe some of these providers weren't around in this way, but what was that like for you when you were architecting this model and you were saying, okay, to do what we were trying to do, whether it's on the business side or the personal freelancer side, these people need on-chain accounts. They need a way to hold assets. Walk us through, as a founder, some of the key considerations that you were thinking about when you were deciding how to architect that wallet structure and what you eventually ended up doing. I think that'd be really interesting.
So this was around end of last year, and we learned the hard way that definitely self-custody was the way for the space, where we were using custodial wallet solutions, really go to market fast and test things out. But we're very hindered in growth doing that by our providers and vendors. So we said, okay, it's not custody. We shouldn't use a custodial wallet solution. Also hard for us to expand globally. And so there are many, many benefits for self-custody. Now the question was build or buy. At the time...
When was this, for context as well?
This was December 23.
So about a year ago, almost.
About a year ago, yes. So the three things that we were considering, one is the way that the wallet was set up had to be secure, right? Many ways to define that, but basically people can't lose their money. Two is it needed to be justifiably self-custody, legally justifiably self-custody. And so we consulted a lot of our lawyers when deciding between vendors or deciding to build in-house. And then three is we wanted to have strong user experience and some control around the user experience, right? And so we didn't want to go with solutions that had the widget. Like it needed to be an API, for example, if we were going to be using a vendor. When we were scouting for solutions, again, at the time, we didn't find one that sufficiently checked off all of those boxes, those requirements, basically for us, for a mix of reasons. But we knew we needed all those three to be checked off. I'm still very glad that we made the investment of building our own self-custodial wallet solution. And the main benefit is that we are now able to customize and expand on the user experience. So you otherwise might not have had that ability with the requirements and the inability of our vendors to do that. So as an example, right, we built our wallet solution, the first version of it, to cater to individuals or consumers. Now that we're entertaining businesses, we have the ability to marry what we believe is a very strong user experience, right? That is, again, geared towards a non-crypto savvy user, which I believe we successfully did for consumer, and now geared towards the business, but do it in a way that isn't dictated by what vendors' capabilities are. So under the hood, it's quite complicated, but for the business user, we're able to marry a really, really strong user experience because we have all the infrastructure in our control. So I'm glad we went through that investment. It's paying dividends in terms of how we're able to attract, again, non-crypto savvy users, even while leveraging crypto's benefits under the hood.
Absolutely. Really not the easiest thing to build.
Absolutely.
But it sounds like it's paying dividends now.
Paying dividends. Yeah, the nice thing too is I don't think we would have been able to do so if our team hadn't already had experience with cryptography and security in that way, right? So it was also leaning on the advantages of our team. And two is my partner works at Phantom, and he's been able to help.
Helps.
advise on a lot of Solana related decisions, wallet related decisions. And so we also leaned on just the advantages that our team had at the time.
Yeah. So double click on a couple things there, because I think a lot of people who are building with stablecoins, or they're wanting to start and grow their businesses using this infrastructure, this is a really key starting place for them. I find that the wallet, like the idea of the wallet, is sort of the first inning of the game. Is like, how are we going to approach this consideration? And so your perspective on this is really helpful. And specifically, I think I was just, yesterday messaging a head of product on LinkedIn about this, around what is the trade-off of going with a regulated custodial option versus a non-custodial, potentially like unregulated self-custodial option. And at least for this founder, they were, or this product lead, they liked the benefit of that regulated alternative. From your experience, it sounded like that was hindering. And I'm curious to understand what specifically that felt like, or what that meant in your context. And maybe if you were like in that place now, starting from scratch, or like if you could fast forward to today with the existing solutions, if you would have made the same decision with at least the wallet as a service space today.
Yeah, I look back and I wish we had thought of the self-custodial a bit sooner, or considered it sooner, to be honest. From our experience, regulated doesn't necessarily mean safe for our users. So 2 examples. One is if you follow any of the Synapse and Evolve trends and stories, effectively what happened is, for the users, there were some recons with Synapse using Evolve Bank as their partner bank. They've paused user funds, and until those reconciliation issues of holding users' funds was resolved, then users were not able to receive the deposits, right? The money that they earned, and the money that was rightfully theirs, until Synapse and Evolve were able to sort out their problems. And these are regulated institutions. They are banks. They have these standards, but users' funds were still in danger, right? And I am firm believer that self-custody is going to be helping with some of those issues that institutions might not be able to solve because of this self-custody, because effectively the money is rightfully the users and they own that. If some problem happened with Parallax, as an example, at least our users would be protected. Their funds that are rightfully theirs in their wallets are protected because we can just give them those keys, right? And Parallax, whatever trouble we have, we can sort out independent of our users. So that's like one real world example of the comparison between self-custody and like custodial in a traditional sense, right? The second is we were working with a trust company that had this custodial wallet solution, which I told you we were burned by. And the reason why we wanted to put more things within our control with the wallets, but also with compliance, actually with KYC, was because we found that even if they were regulated, their compliance systems weren't necessarily as structured or as robust as we wanted them to. And so I wouldn't necessarily say that regulated equals compliant or strong or secure, but the benefit of that is that maybe it's easier for institutions to have to trust because of some of the name and the branding and all of that. So at least with our experience, I think it's regulation doesn't necessarily mean secure or compliant. And we saw that being burned several times and wanted to bring more of that into control so that we could also keep a more compliant system within Parallax in a way that was also beneficial for our users.
Yeah, it's a huge, I think that's a very accurate statement. Regulated doesn't always mean safe. And the counterparty risk of a regulated, like, yes, you can offload, in some ways offload some of that, maybe some of the core competencies a company doesn't want to deal with, but that offloading process is also a huge, finding a partner that you can trust in that is inherent to that model. And it sounds like the trade-off you made was, if we don't have to trust anyone, if we can just build, using those 3 points that you've mentioned, build a secure, justifiably self-custodial, an amazing user experience, why wouldn't we? How have you, sounds like you went down that path and it's now paying off really, really well. What were the things that when you were building that and now today are bearing fruit? What were some specific things? I know for anyone that has dealt with a self-custody wallet in the past, onboarding someone like a family member or a non-crypto native user is something that's really hard, and still to this day is really hard. How did you get around that? What were some things that you built into maybe the onboarding flow or the key management that made that easier?
Yeah. Give me one sec. I just literally wrote about this yesterday, so I'm just going to pull that up.
Nice. Well, that's great. You wrote a blog about this?
I wrote a draft of something, which I will hopefully be sharing soon. Okay, great. I have the outline there. One last thing I'll add to the earlier point is the converse of regulated doesn't necessarily mean better. I think non-regulated also doesn't mean non-compliant, right? So just emphasizing that actually we have really strong compliance systems, but I think is very strong for a company our stage within Parallax. And we wanted more of those things in our control, because then we could actually still cater to our users, but make our compliance system more robust than relying on our vendors to do that properly. Now, on your question around how did we build our wallet experience, knowing that onboarding in crypto and creating wallets is a cumbersome experience in general. Without going to the technical details, we have this 2 of 3 shard model, effectively, that allows our users to make transactions on Parallax in that way. But really the principles, right, that we had. One is we wanted to eliminate jargon when you're building the experience. So we don't mention seed phrases or wallet address or shards like I just talked about. 2 is we use analogies when going through copy. So for instance, what's necessary to create a wallet on Parallax for the user is they need to enter a PIN, which is what they use as the way to sign a transaction, basically. And they use what we call a security file, right? And the security file is only there if you lose your PIN, right? And so under the hood, this is the 2 of 3 shard model, right? And so how we, instead of saying, hey, you need a PIN and a security file, and that's that, we actually use an analogy saying, hey, a PIN and a security file are 2 keys to 1 lock. And we actually borrowed this from OnePass because they have a similar kind of a cryptographic model. And we tried to use these analogies to paint a picture in people's heads of like, hey, while this experience might be slightly nuanced, here's how you might think about it, 2 keys to 1. And then third is we really tried to focus on the user rather than technology under the hood, right? Where I think in the past or sometimes founders lean into, hey, crypto is really, really cool, and it is, but they also surface that in the product, which makes it very confusing for the type of user that we're trying to solve for. So we really, really wanted to build not a crypto app, but a financial product that used crypto and abstracted a lot of the crypto under the hood. So it was hard. I think we did a lot of user testing before we even launched the wallets. And we were very careful about the copy and very careful about like emphasizing certain things around the copy. It turns out a learning that we had is for financial products, if you emphasize that this is for your security, even if they're like, we have red banners warning people, like if you do not remember your PIN, if you lose the security file, you will lose your money. Turns out they're not deterred by that because they understand this is Parallax reminding me to be safe about my finances. Great. Of course I will do that. So we're proud actually we have 93% in our wallet creation rates. So very, very high, and users completed within 2 minutes. So also very, very simple.
That's amazing. And it sounds like you have a very close relationship with the Solana team or the Phantom team.
Phantom team.
It sounds like you've built a lot of the core infrastructure using Solana. Tell me more about, you mentioned your journey of sending money using your own Phantom wallet, which for those who aren't familiar is a very Solana native self-custodial wallet where you can send and receive funds using that. For you, what was I asked Arnold Lee from Sphere Labs, who's also on the same question, and his answer was, Solana just works. That was it. That was his answer for why Solana. What's the answer for you? Like, why Solana? Why was that sort of top of mind as you were building this?
Yeah. One is leaning on the advantages of the team. So I was very familiar with the ecosystem, new folks in the ecosystem, and so that was heavily considering that as well, right? Leaning on our unique advantages. 2, yeah, I'll agree with Arnold. I think it just works, but also adding to that, like, it works in a way that befits our user, right? What do they care about? Fast and cheap. And Solana is both fast and cheap. I think at the time, it was early days for Base, early days for these other blockchains, but still, even in comparisons, like it was still Solana that won in terms of ecosystem development and partnerships, and for this payments use case in particular, because it was fast and cheap. And I don't remember if it was around this time or like for the past year, is that other stablecoin use cases or the growth of stablecoins, particularly for payments, is also happening in Solana. Visa having partnerships with Solana, PayPal, POC really seeing the traction in Solana. And I don't think that's for any reason other than, yes, for a payments app, this makes a ton of sense. So I'm glad we made that bet. I'll say sometimes, sometimes we have congestion still, but the team is also very quick, as in the Solana team is also very quick to help address that, because they understand that actually Solana is being used for a lot of use cases these days. And they're very sharp and very on top of the developments in the blockchain.
Yeah. Special shout out to Amelia and Shiraz and the team at the foundation for a lot of those use cases that they probably worked very hard to make come alive.
Sure.
Yeah, they're a great group over there. So I know we're coming up on time here. A couple of questions just to end our time. Thank you again for the time. As there's a lot of focus right now, especially just with the Stripe acquisition and a lot of companies and big announcements coming out in recent weeks around stablecoins. You've been building in this for, way before any of that was really going on, and there was a spotlight specifically on this stuff before podcasts like ours were directly only focused on this. How are you thinking about the advantages there that come with being around and having been in this space for some time, that from a competitive sense or a market cornering sense you think about that gives you all an advantage since you've been building in this space for a while?
Yeah. First, I think there's something to be said about the builders who have continued to build and really only started to build or continue to have this thesis during the bear market versus the bull. I think right now we're seeing the excitement. It's great. I'm very excited for everything that's happening because it's going to progress the space further. But I also think there are a lot of tourists. I think a lot of people are coming in and are like, great, stable coins. And then the next wave of trendy thing will happen and then they will be gone. Whereas I'm very excited about the ones who have entered during the bear market, have stuck around and have also met them and been friends with them, which is great because I think there's this mindset of like we're growing the pie together rather than taking a share. And I'm looking at those projects more so because they've survived the harder parts of building a company in the crypto space. And it's a testament that they'll probably survive or have more grit to be able to survive the next wave, which is going to come. Right. So that's something to be said about like builders continuing to build even in the bear. Second is...
What would you say to the person who... Sorry to cut you off. I was just going to say, what would you say to that person who might be being the tourist use case and might have like genuine interest, but potentially is a flight risk to staying around? What would you say to that person, to whether it's a business or a person, to really... What are the questions that they should be asking themselves around stable coins or crypto or just this topic? What would you say to them
Yeah, I think the nice thing about Parallax is actually we're not basing our growth or revenue or any of the traction. It's not reliant on the bear bull cycles, right? Which is nice because effectively who we're serving are not crypto savvy users and they're not out there to find the right price. We're using stablecoins, right? And stablecoins, regardless of a bear or bull market, will stay stable, and that's nice. So for me, I like that and see the potential of stablecoins and certain use cases, even despite a bear and bull, right? I'm not saying I will say it's easier to build in the bull because then like more partners are popping up and there's more just like excitement in this space and we're put in a pedestal because we're touching crypto, but it's not a determinant of whether we're not dependent on prices, which is nice. So I think like for me, it was a use case that I saw real applications for and continue to see real applications for and is not determined by cycles. And so for anyone coming in, it's also still, I think stablecoins can also be used in ways that are determined by the cycles, right? For example, outside of payments, which is fine. So long as you believe in the application of it and you come into the space open-minded about what you do believe in and what you don't believe in, then you'll be sticking around despite the cycles.
It's something that I find really refreshing about the moment we're in with stablecoins is, and as I think about branding and positioning this business in that sense, just that idea of staying stable and thinking about this not as a speculative asset, but more as a settlement system and something that isn't actually tied to a price, I think inherently opens you up to more of that real world infrastructure benefit that you have realized and you are building on top of. And that's why I've really enjoyed this conversation, because people like you who are building with the core infrastructure that stablecoins provide, regardless of what the price of these other crypto assets are, for me, that's one of the most fascinating moments that we're in with the industry. It's something, as someone who's spent their entire career in payments, is something I really want to continue to drill into and highlight. So really, Mika, really appreciate you taking the time today. We'll have to do it again. This was a really fun conversation. I feel like I have like 20 more questions to ask, but we can wrap up there. Any final thoughts for the audience? Any thought or takeaway that you want to leave them with before we go?
Yeah. I'm excited for more of the newcomers in the space. I think with every cycle, there's a reason people come and enter a crypto space, but also there's a reason that people stick around and continue to believe in it. And so I believe this is one of those moments where, stablecoins is a way for people to enter the space and see the future. And I also think there's going to be a lot of people stick around because of the applications. It's showing the potential it's showing, and the potential that we're also seeing at Parallax. So excited to welcome you all. And if you ever want to use Parallax, go to withparallax.com and check it out.
Awesome. Well, thank you again for your time, and we'll have to do it again soon.
Awesome. Thanks, Drew.